The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Let me just finish doing this right here. That'll make it very clear. This is the cash S&P 5-minute chart. It's such a surprise to me for years and years why any particular chart would manage to give certain renditions of the Chapman wave even when it doesn't trade in the way, in the time periods that, say, the futures do. For instance, the E-mini trades, or the S&P futures or the Dow futures, they're trading, except for a brief break, they're trading almost 24 hours except over the weekend. The cash index is only open when the market is open. And yet, there are very nice signals here based on the Chapman wave, especially the Ds. Look how many Ds there is. A D, which is a Chapman wave 5, on the way up, a D on the way down, the 5-minute chart. Then you make an arch formation with another D. You pull back, retest the low. That actually goes to an E. But what you do is you recycle to the upside, and you go A, B, C, D, instant restart, A, B, C, and another D. Unbelievable. Pulls back, goes A, B, C, and then it goes A, B, C, D. And then it pulls back again, and it continues the notation to a trough F and a Chapman wave 5, and then it starts a rally and it goes to C. Now this was difficult to trade in the sense that it went to C. If you're waiting for D, you'd be waiting quite a while. But if you realize that the arch formation is a potent weapon, a potent instrument in your toolbox, then you would have said, okay, that could be a failure. Well, in fact, it pulled back from the C, didn't break the low of 2135 something or other, 2135.91. This is cash, remember? And then today gaps up and goes to the D and the E. And there's your Chapman wave 5 again, and it's gone to an E. Now it's pulled back to a trough B, a nice little bounce, gray B, breaking the resistance line. That's very important. This is something very unusual what's going on here. Now I can talk about the market. I want you to show that because I know a lot of people say, could you just show us, give us a sense of what you're looking at in the E-mini futures. Here's the E-mini futures. They went to a right arm extension, or what I call a rogue wave, peak F, and then plummeted down sharply from the 2143s down to the 2135s, and now having a nice bounce, going to hit the 2139.50s 9-period exponential moving average resistance. But the real issue here is, and let's go to this. We'll go to this one at a time because there's plenty of time. We've got the Fed meeting tomorrow, and believe me, positions that you take today could look very different tomorrow at 3 to 4 o'clock. But there's no reason why you shouldn't be preparing, in a sense, saying, you know what, I think such and such looks overbought. I think such and such looks oversold. There could be a rally. There could be this, there could be that, and you could plan in that way. Now let's go to this. The Dow is, here we are, INDU. The Dow is up 72 at 18,192. Just like yesterday, just like almost every day since the Dow broke down from the 8th of September, there has not been a close above the 9-period exponential moving average once. And that 9-period moving average is around about 18,000, let's call it 18,200 to 18,210, right, in that area. Even today, it got repelled. But there's constant buying. And I'm saying to myself, wait a minute, is that because the market knows that the market knows that there's going to be an interest rate bump? So what's the big deal? Quarter of a point? We've already had basically like not a quarter point, but we've had to move up. Is it discounting? So let me run the numbers, then I want to go to Louis Nash. Louis, if you can just hold on, let me do the numbers. I've got the Dow up 76, and the levels to watch are 18,230. That'll be a nice little break to the upside. On the downside, you've got 18,100 on the day. You don't want to go underneath that because that'll be kind of quite weak action. The S&P, SPX.X, there we go. The S&P is up 7.84. The S&P and the Dow are The Dow's a little stronger at 0.42% higher, and the S&P is only 0.37. 500 stocks as opposed to 30. And I'm looking at that and saying, okay, going to have to watch the rest of the day and the VIX index. We'll get there. So the S&P is trading at 2146. The levels to watch are 2152 for a break to the upside. I'd say 2154 actually. And on the downside, what I'll be looking at is a break under 2137. And then I'm going to say, got to be careful. Just a holding pattern because a lot happens tomorrow. So I'm going to go to Lou and Nashville. Let's go to Lou. Lou, how are you?
Fine. How are you?
I'm well, thank you.
Good. I was thinking of shorting CRM, I think it is.
So that's Salesforce.com, right?
That's right.
It's one of the leading cloud companies. Now, I'm with you. I think that this stock has been hyped. There's another company that I always talk about. I put them in the same category. I can see the guy's face perfectly right now, and I'm just blanking out on the CEO's name. He talks a real good game, and they've produced a real good game, but it's the same as, I'm going to find the stock right now, ATHN, Athena Healthcare. It's the same situation. Bush is the CEO of that company. I think he's a cousin of the Bush family. And Mark Benioff, thank you very much. Yes. So Bush always talks a good game, but there's a certain point where you've got to produce the goods. And for a while, since 2014, way back at the double top, in February, it's just gone sideways. Well, CRM, I'm putting in exactly the same category. I think that you're absolutely correct. Now, the real thing, this is the tough part for me. You've pulled back from the 84 area. The last high was back in 84.48 back in May of this year, and it's gone from 84s down to 73, 72 area. That for this stock, that's quite a big pullback. But the biggest pullback was back in November of 2015 when it hit 82.90, and it pulls back a little bit and goes from 82s down to the 52s. That's a $30 decline. So I'm with you. Now, what do we do, Lou? One of the things that is, do you use options at all?
Yes, I was thinking of an option, 72.50.
Okay, we're on the same boat, because if you did the stock, I'd have to say you really need 3 positions. You need it because there's no reason why it couldn't just bounce to fill the gap a little bit in the 76s, which would mean that if you had 1 position, now you're in a losing position. I'd rather have it that if you were doing the stock, you'd do a small thing right now, and I'd give you the layered move right up to the 76.50s as shorts. But if you're doing an option, what month? I would be looking further out. I'd be looking at November, October or November. But definitely, I want many weeks, because I think this is going to play out over a series of weeks. From the chart pattern that I'm looking at, it's under serious pressure, the chart itself, which often says that the company might be under pressure. And I think that there's now a lot of competition in the field. If you don't mind, hold on through the break. My mind is figuring out the kind of strategy that I think might be beneficial and gives you time. Would you be able to hold?
Sure.
Great. We've got Lou in Nashua, New Hampshire. We're looking at CRM, and the Dow's up 70, S&P's up 7. I'll be right.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So we're back and we're looking at CRM, which is right here, which is Salesforce.com Inc. It's a cloud. It's actually, I would have to say, for a long time, it's been one of the leaders in the area. And now here's the question. In the weekly chart, and Piggy was pointing it out in the den, in the Chapman Wave, there really wasn't a peak D, and you can't call it anything else. It was a peak C, but there was a very subtle move that was just a few cents away. Even this is a little too much for me. 76.44 the week of the 8th of April, and 76.59. That's 15 cents. I had looked at this a long time ago because I looked at that and I thought, peak C, this is very unusual. Is that going to fail? You never fail at all-time highs at peak C in the Chapman Wave. So it's either a peak D with a phantom peak, what I would call a phantom peak, or a peak C1, peak C2. That makes a little bit more sense. But even then, I would have liked peak C2, which is at 83.09, closer to 84.48. If it was 84.10 or something like that, I would have said, okay, very clear. I'm just going with the chart pattern. The chart pattern says it looks like a double top. The MACD is stochastic, everything declined. But now it's at a period, it's at a phase where the stochastic is trying to bounce. The price is not. And I'm going to suggest that there could be, it's had opportunity to do it now, Lou, but it just didn't even take it. And that's what you're looking at as well. The market has bounced very nicely a couple of times, and it's failed. It's very much like another stock that we've been looking at that we are short, that it plummeted and refuses to even bounce at this point. That's the reason why I think starting the put position here at 73, if you're able to also have just a little bit of cash left over to put another position on any bounce towards 75, between 75 and 75.50, then I think you've got yourself something that is really intriguing. Why? Because then your average cost, if it was a stock, would work very well. Unfortunately, because it's an option, the decline in the premium of your initial position now, the one at the 73 area, will have decreased so that it'll have to come back a lot more than a half to be able to come back underneath to get the premium. But we're talking weeks and weeks, hopefully a month and a half at least. And if that's the case, my target for this stock would be between 71 and 69. That would be the first kind of target. But the real target if I'm correct in looking at the MACD and the stochastic in the monthly chart, would be a test of this candle's low. That's the candle of March, which can take it all the way down to the 67.50 area. That would be a really nice risk to reward. So here's the recommendation. Check out which ones you're comfortable with, but somewhere in the 73s. I'd go out to November, and I would then choose the 75.50-ish area. If if there is a bounce, I'd have just enough patience to say, let's see. I don't think it's going to. But if it can get to 73.50, that would be the second place to put it, and you've got time. I hope that works for you.
That works very good.
Good. Thank you so much for calling, Lou. Appreciate it.
Thank you. Thank you.
Thank you. Well, let's go to Greg in Austin, Texas. Greg, how are you?
I'm well, thanks, Basil. How are you?
I'm well, thank you. So,
Well, so I'm back.
yes.
And, so I'm still in the UGAS. I don't know if I've held it 3 times this long ever. So what I was hoping for is you could give me a Chapman wave count in the contract, because I don't get a great chart for the contract in the daily and the 120.
So if you don't, yeah.
Go ahead.
Which
ahead.
contract? What are you looking at? Which contract? The NGV? No, the NG. Which one are you looking at?
Well, the actual natural gas contract, because I have to go online and find contract.
Okay, so
platform I
let me
use
tell
to-
you what. I tell you what I've done. I've got the natural gas. I think you remember I used it before, and it seems to have worked nicely. I used the continuous contract of and natural gas is at the symbol at NG, and it's trading at $3.16. What do you know what yours is trading at right now?
One moment, please.
Okay, no problem.
I have to go back and open this up. The reason because I'm looking at the weekly of like UNG and the the natural gas contract that I'm look at, and so I'm wondering, since it's a nice cup formation with that long rectangle coming out since the spike up on the date of the 1st of July,
right.
that if it can break above that, then does it have enough movement in the daily and the 120 to go ahead and proceed up to around 927 if you look at the UNG? And as far as the natural gas, mine right now is trading out at 3.017.
Great. So we're within pennies of one another. I've got the continuous contract. Now, if you remember, I looked at the UNG and I did a left side, right side price time match with the cup formation. And I was saying, I'm not sure if it can do that, because when we were talking, I think it was the UNG was somewhere in the 840 area. And I said, so far the pattern looks good. It's held the 9-period moving average. And you remember, you want to know, should I hold it over the weekend? And I said, in this particular instance, I think yes. And you did. So now what I'm looking at, it's going to a leg D, and it's an exact within 1 day of the exact measurement. In other words, the left side, right side high of 8.87 that we looked at from July the 1st, was it? Yep, July the 1st, came back down, went all the way to $7.50 something cents. And now, today, 1 day early in this, as I call it, the left side, right side price time match, where I use the plumb line, preferably the low or the high of the cup for the arch formation, has worked, to the day perfectly. Well, in 1 day perfectly. So now I'm going to have to say to you, now let's look at the holding pattern. Do you want to be holding it here? And the answer is, I have no idea what the Fed announcement is going to do to the currencies, to the commodities, to gold, to the dollar, because the market, it seems to be, is it buying the rumor and selling the news? That's my gut feeling, is that's what we're going to see. However, the weekly pattern of the UNG, it needed to break above 8.87, and so far the high is 8.87. So another penny, and I would have said to you, wow, we've started leg E, and that could even be an alternate count. So I don't like to mess around. I'm going to say to you, if you have enough of the position to take something off, because for me it's achieved every one of the goals that we were looking at. I've not got it for my subscribers. I should have actually listened to you and put it in the newsletter. It's done very nicely. It's kind of achieved what we were looking at, the left side high bar of 887 from July the 1st. Now I look at the MACD. The MACD is strong. The unbalanced volume is strong. The stochastic is at 91%. I want to hold as much of the position as I can, but I absolutely feel it's important that you do reward yourself, because that's how you keep making money in this business. So can you hold on a moment, and I'll give you the...
Yes, I will.
You can, because I've got a little strategy you might want to be thinking of. Folks, we'll be back. We're looking at UNG. We're on with Greg in Austin, Texas. The Dow is up 69. S&P is up 688. This is going to be a very interesting 2 days. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just as we're coming back with Greg in Austin, Texas, I just wanted to show the 5-minute S&P cash. There's that H pattern we've got to be wary of. And is this 1 to the downside, 2, then 3, 4, and then whoops, down 5 at 21.35 by tomorrow? I don't know. This is a very important moment. And the market, I actually don't like it when they prop it up like this. Let's go back to the natural gas contract. So the thing is, in my natural gas daily contract, I'm in E, and that's number 1. I'm in E in the weekly chart, and I'm in C in the monthly. It's really important for me that the UNG gets that. Let me just, where did it disappear to? I think I just hit the wrong. Okay, right here. UNG Yeah, I want that extra penny so that U and G can start leg C in the weekly. So here's my recommendation. I love the action. It's done everything you wanted. I would say to the contract, hey, I'm long. You tell me when I'm wrong. That's number one. Well, there are two ways of doing that. One is to say, I want to take off a little bit now, and I want to keep a core position. Even the core position could be split into two parts after you take something off. And that means that one part you could actually put in a stop. If you don't mind, I'm going to go to, on the UNG right now. Just if I had to use the UNG as a criterion, I would say that if it pulls back below the candle of the 16th, below the high of 870, 13 cents, it could do it in a split second because it's just jumped 21 cents. Then I would say, okay, if it pulls back and then immediately bounces up, that's good. If it pulls back and then it just sticks, then I'm going to say take another third off, try and keep your core position as long as you can, because now you've got a very nice gain, you've got an okay gain, and the rest will be a break-even trade at worst. But the reason why I'm trying to play it this way is because the weekly chart is suggesting that there's still inner strength, and the monthly chart says, you know what? I'm not shortable right now. I'm moving higher. This is more intermediate term, and until UNG really cracks $8 and starts to trade at 780, which says I'm just stuck in a rectangle formation, forget about me for a while. This is upside with higher highs and higher lows. It's exactly what you look for. So number one, I definitely would think of taking off a little bit right now to reward yourself. Number two, I'd split the rest into a core position, your entry point, which is a break-even trade no matter what. And the other portion of that is one that says, now if it can bounce, if it pulls back, but it just pulls back from the 883 level a little bit under to 877 and then goes to 891, I'm going to treat that last, not the core, but the trading position. I'm going to raise the stop, not too much, just raise it enough to give it a little bit of breathing room, because now you've only got two positions. So that's the way I would do it. And let's see what happens. Let's speak again in a couple of days. Let's see what happens.
Great. Yep. Thanks so much. And yeah, one of the reasons I like trading the natural gas that I've noticed is that the dollar and the rest of the market don't seem to affect it very much. It just does its own thing.
We mentioned in the den, someone was saying, P in the den was saying that natural gas seems to trade on its own, and that's exactly the point. And that's why I'm saying, let's see how it does handle anything that happens tomorrow, because if it just rocks solid tomorrow afternoon at 4 o'clock, that'll be a great sign. Hey, congratulations for having patience and a really good eye. Thank you, Greg.
Thank you.
Let's go to Tim. Bye-bye. Let's go to Tim in Denver. Tim? We got Tim. Maybe Tim's listening on the computer. There's a little delay. Tim, you wanted to look at the IBB. I'm not sure if. Tim. I'm sorry, Tim. You just dropped. Hey, Tim, if you can call back, that's good. But I'm going to do the IBB because I know some people call it either at work or they're busy and they just can't hold on long enough. But they do have the question and they often are listening. They just can't actually communicate. But Tim, if you're there and you want to call, just shout, "I'm here," and I'll hear you. So what we're looking at here, this is a pattern that I studied a long time ago, maybe 3-4 years ago. Some of you might remember. I said I'm studying a pattern that I call the reverse cup and handle pattern. What the heck is it? It's just that. Here's a little drop bucket pattern in the Chapman wave methodology. I haven't got my CD. I should put it on. The drop bucket pattern says that if you make a double top and the technicals are fading, watch out, because if you, that's the price, pulls back 1/3 to 1/2 from the left side high, in this case the IBB to 99.48, there's a real good chance that you can test the low, the cup low, in this case 288.01, that was made round about the 10th, 11th of August. And then you can get a 1-to-1 to the downside. We fulfilled all of those requirements, but hey, wait a minute. Now you're making a second cup formation, a larger one. And that means that there could be a head and shoulders pattern, inverse head and shoulders. Tim, you there?
Yeah, thanks, Basil.
Okay, good. So I was just babbling away while you were trying to get back on, and I was just basically saying the high of 299.48 had what I call in the Chapman wave methodology, it's that lowercase h inverted. I call it a drop bucket pattern, double top. It couldn't get over the 299.48. It went to 299.25 on the 24th of August. And the rule of thumb is that in my pattern, if it breaks 1/3 to a half from the left side lip, then there's a real good chance it's going to test the low. If it breaks the cup low, it can go 1-to-1 to the downside, and it's done that. It's gone to 276.76. In my opening call, we actually have no position at all. I almost went long, and then I thought, I don't want to mix metaphors here. It's looking good. And in fact, to tell you the truth, I like it. I like the fact that it could retest. Now, that's this particular cup in reverse handle and cup formation often goes to the left side high. Whether or not it breaks it or not is not the issue. The pattern says it could then form a third smaller cup. And that in turn starts to look very much like an inverted head and shoulders, which could be very bullish. But then you've got to be very careful, because the history of this pattern says that the little cup can get a bigger cup and then make it even a bigger cup after that. So now let me ask you, what are you doing?
Well, I'd like to short it.
Yes. But you haven't done anything yet. You've had patience, right? Okay.
Yeah, well, yeah, it's been on a chair, and you've been reading everything's positive. The fund managers, like you said earlier last week, I think the fund managers like this right now.
Yeah, you see, because it's held, and now they're either trying to get their money back by doubling up or doing anything like, or looking at it fresh and saying, hey, what bargains. I mean, before, every hour we were rewarded for 3 years, every time we bought it. This is the longest they've been out of play, and that goes back to the beginning of 2016, for at least for this last move, and it's gone from the 340s down to the 240 level, 100 points. So this is what I'm thinking. I actually like it. The big test for me, and the only reason why I didn't actually go long this, and I almost thought of going long, is because we are so close to the 299 level, and that's going to be the big test. And isn't it ironic that tomorrow is a session that could go any way in the market? That's number one. Number two is we are within a couple of points of this getting back to that very critical level. And the only thing I wanted to say to you is if IBB smacks right through 300 and goes to 302 to 303, I'm going to have to consider that the weekly chart has become a very bullish pattern and not a bearish pattern. I have to change my thinking somewhat. Can you hold on?
Yeah, go ahead.
Okay, I tell you what I'd like you to hold on. I'll tell you what my strategy would be. So I'll be back. The Dow is up 59. Let me show you the E-mini right now. Right here. There's that pattern. There's the H pattern. Remember what we did? We drew that in. There it is. Okay, I'll be back. Basil Chapman, Dow's up 56.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Now, let's just do this because we've got Tim in Denver. So, Tim, I'm looking at the BBH, which is slightly different mix. It is the Van Eck Vectors Biotech ETF, and it doesn't have the same chart pattern, but I like to put the two together, and it is saying to me, don't be fooled. The pattern you're looking at could start to deteriorate quickly at 117 up 1.23 if, in fact, it makes an arch formation and breaks 112. You know, these things can move 5 points fairly quickly one way or the other. So I've got that in mind, and it's got the same kind of double toppy pattern that we were looking at. So my thinking here is in the IBB, so you would short, you'd use put options, you would, or you'd buy the 2 times long, 2 times short. Well, how would you do this?
I'd probably go the LABD direction.
Okay. Now, you traded the LABD enough times to really feel comfortable because you know it moves really quickly. And sometimes I've noticed the volume isn't always there, so you might not quite get your price. But as long as you're very comfortable with a 3 times short, that's fine. But I'm going to make the suggestion that you do it a little bit more, is an African word, gashly, which means be careful. And I'd be a little gashly here. I'd be a little careful. Why? Because if IBB does break out and the MACD and stochastic are actually improving, I'm not sure that it can, but the pattern is now a lot more bullish than bearish. I'm going to say to you, if you can get it, it's going to have to be between today and tomorrow. If on Wednesday afternoon the market is up huge and the IBB is up huge, I would not be looking at this as a short. Only if you've got a real mixed market tomorrow would I be looking. That means you might not get more than a point or so to the upside between 296.20 now and maybe 297, 298. So you see, if you're using the LABD, or let's just say using the BIS, which is 2 times short, then my recommendation would be it might be early to do it now, but if you just nibbled at that position, it just gives you a sense of, okay, I'm going to do nothing now. I've got my stop in place. And now I've got that big test. You can see the dashed line that I've drawn here, 299.48. Anywhere, if it goes to 299.49, that is a new recovery high, and I have to respect it because it changes the weekly to an F/B, and the MACD and stochastic are okay. So I'm just saying you can either have paid. You know what? I'm going to recommend. Will you be able to watch when the news comes out tomorrow? Will you be right here?
Most likely, is it the noon one? Is that when they're going to announce?
No, I believe this is 2 o'clock. 2 o'clock is when they announce, and I'm not sure if there's a conference at 2:30, but 2 o'clock you're going to get a real good sense of what's going on. Because what I was going to say, you know what, for a very small percentage, I'd rather lose the percentage for being right than lose it for being wrong, because you might not be able to get out in time if you're wrong. But if you're right and the IBB starts to turn down tomorrow, you could easily grab the BIS, even if it's at, what is BIS right now? I just would be a little careful today to get the LABD, the 3 times, that's all. So the BIS trading, oh, look at that arch formation. It's getting ready to maybe bounce. At 30.18, big deal. If you get it at 31.20, and you're expecting now that it's going to have a good run to the Tesla 34.35 high, 1 point is not going to make a difference. But if you're wrong, this thing could really quickly drop to the 28s. And it's not that. It's not that. Yep. You want to say?
What I kind of like, too, is that IBB can be kind of fickle, too. I mean, the market could be way up, that could be down, the market could be down, it could be up.
Very good point.
And it's been on such a run already. You know what I mean? I kind of, not that it can't keep running, but...
So here's another way to do it. You can keep the LABD in mind. Is it LAPD or LABD? LABD, right? LABD.
Yeah, LABD, yep.
So I'm thinking, if you want by the end of the day, because I think tomorrow is just going to be a real quiet session until 2 o'clock. If you want by the end of the day to start a position, you might want to start it in the BIS. And then if you find you are correct, you can easily just jump right in and go to the LABD.
Thanks a lot, Basil. I really appreciate your analyzation of it.
Okay, and just don't be surprised if it actually holds well and on Friday it moves up. I'm liking what I see this morning. I almost said, you know what? It could go up, it could go down. And if I'm looking at a stock and you're looking and it says, hey, it could go up and it can go down, what's it telling you? It says, hey, if you're not in position already, just don't rush. You've got time. So I want to see the directional move. And I'd even say to you, give it a little time and see if the IBB goes from the 296s, maybe that's where you're looking at it. If it goes to 294 immediately and then doesn't rally but stays at 294, I think you've got yourself at least a little bit of a turn and you've got yourself maybe a directional move. But it's a tough vehicle at this point. So I hope that helps you. Let me know what happens.
Thank you, Basil.
Thank you very much for calling. I appreciate that. It's Tim in Denver. Let's go to Ernie in Dearborn, Michigan. Oh,
hey, Basil, this IDV is really something, isn't it?
Oh, it's an amazing thing. Now, you just tell me, you are still holding your SRPT.
Yes.
And remember what we discussed? You were holding it and looked good. And I said to you, you know, Ernie, you're the one that's done the homework. You're the one that has a really good feel for it. I'm just going to recommend that you hold on a little bit, because news, FX, these biotechs, and they come at the darndest moment. Who would have thought that yesterday, out of the blue, a stock that's trading in the 31 area, 30 to 31, suddenly has a 20, what was it? It had a move from the 20s to 55. It has a monster move to the upside. And today it's made a new recovery high.
And it's holding fairly well today,
That today was the very key session, because this is where all the bad news comes out the next day. So, but this, but that, there are no buts. This is looking good. I am going to make a recommendation.
Go ahead.
You've had the patience, you've had the wherewithal, you've had the integrity to do your homework and then stay with it.
Correct.
I'm going to suggest that you've got to, now in your mind, you have to think of it 2 ways. Now it's a stock that's in play at 55. Folks, we're looking at SRPT, Sarepta Therapeutics. If you've read all the front pages of even your local newspaper has it there. I'm sure the Boston Globe has it everywhere. There's a big breakthrough in a particular, now my wife told me, she's a physician, she said, Duchenne, it's a much smaller population base, multiple sclerosis. But that's not really what people are looking at here, because they're going to monopolize that particular area, at least for a little while. So I'm going to suggest to you that in your mindset now, what you have are two frameworks. One is, wow, I bought a stock and it has done absolutely spectacularly. It did what I was hoping. No, it did way more than I was hoping for. Correct? I mean, you didn't expect it to slap up into the 50s.
Quickly, obviously.
Not in one move, right?
No.
So therefore, something's saying to me, I know this is where you would actually say, wow, this is in play. I think the pharmaceuticals, everybody's going to be looking at this. I should be doubling up. I'm going to give a little bit of a different perspective. Can you hold on?
Sure.
Okay, we got Ernie in Dearborn, Michigan. We're looking at a stock that even today is up $6.55. $6.17 at 55.10, up to almost 13%, and yesterday it was a monster. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So, excuse me. So we're back. So, Ernie,
you've probably just before we get carried away and I forget the question. If you'll notice back in around 2005, it had that high in the 55 area, then it had it again here in the year 13. Now it's kind of in that area again, and I'm basically a point and figure type of guy, okay? And now we've had this long flagpole type of thing up again. Now we know that somewhere along in here we're going to be drawing the flag or have a upside down V or something.
Right.
Any comments about that?
Yes. In the long term, this has just gone to leg D in the monthly chart. D is where you start to get a little bit cautious. It could be very bullish, but you still want to say, hey, now you've got to be a little bit careful. So this is what I'm thinking.
Okay.
I would, as much as on the one hand, I would say this is now in play, and I think that they're going to be buyers. I also think there is going to be a correction. just a natural correction because some people were taken by surprise. So I am going to suggest that you take it out. You could even take your principal off if you want, because then you've got a free thing. And then I would really put it in a drawer and just leave it. But I'm thinking practically here, and I would say at 55.11, you've just got a whopping gain. I would take some off. Some people would say immediately take half off. I'm going to say maybe a third, and then treat the other as 2/3. And the 2/3 is your core position you don't want to touch. That's the one that goes in the drawer, and you just leave it there.
Okay.
But the rest of the position is what I'd use as a trading position. You could do one of two things. You could take 1/3 off now, and you can say that if it spikes up a little higher to 59.10, then even part of that remaining 1/3, that's the trading position, I would start to raise the stop on a portion of that and say, I want to plan to put that money back if Sarepta Pharmaceuticals ever gets back to the 47 to 45 area. I don't care if it goes lower. It means that I've bought it $10 better than it was when I sold it. That's the thinking.
The lowest that I can see it is about 43.
Yeah, or even 37, the 9-period moving average. But at this point, I don't think it's going to do that much because there are a lot of people that are looking at this now. So I'm just saying, so treat it as now one part is going to be your fund where you're going to trade it. Other part is just you've got it and that's it for a long time. It's like inheritance you're hoping to keep it for a very long time. Maybe not, but that's what your thinking is. And the area is to say, I'm rewarding myself. I'm taking something off right now. I would be so comfortable with that. Even if tomorrow it doubled again, it's not the point. The point is
I understand.
You've got to do money management. So I hope that helps you.
Okay. Hey, look, I want to put a few comments in, so I'll let you run. Thank you.
Oh, thank you very much. Okay, good. Speak to you soon. Let me know how it goes. So I got a couple of things, folks. Let's just quickly do this because I had some really good. So OIH, the question is, I see let's see. Oh, quickly. OIH, and the question is, no, it's a statement. Khan is getting out of some of it. Yeah, the OIH, you remember, I'm a little concerned about it. I do think that it had a nice move, and I'm upset that the OIH, the oil service vectors, went at 26.64. It's broken the left side low of the 2nd of August. So that to me is a little bit of a worry. But you've got your arch formation. I would not be in this. I'm looking, I don't know about shorting it, but I'd be out. Next question is XLF has changed, so it's a little different composition. So let's go to C, which is City, which is the question. Holding quite nicely, but it is in a sell signal in the daily. Weekly is holding well. JP Morgan was the question as well. Yeah, they're all holding. I think the bank, tomorrow at 4 o'clock, we'll know a lot about what's going on with the banks. Let's see if they hold or not. I don't want to speculate here. It's too hard. NKE, which is Nike, which remember I had a hat trick top way back when it was 68.19, December of 2015. No, looking very poor. There are a lot of stocks that are looking poor. My bias here is to be looking to the downside. Hey, folks, have a great day. Tomorrow we're going to have a fascinating show. We'll prepare for what the Fed can say. We're already preparing, actually. Have a great day. I'll be back tomorrow. Check out my opening call. I think you'll find it very elucidating.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.